11:01 Pacific Standard Time, Sunday morning Pacific Standard Time, 7/29/2012, and it's a wonderful day. It's a wonderful day for many reasons. It's a wonderful day because we're looking at the Dow Jones weekly industrial averages, and it's 30 stocks in it, and we had our short up here on that Dow, where the weekly trend came right back down and tested the low end of that calendar 2000. It was 1225 and it was 12164, and on the weekly level we've come right back up here to this wall of resistance 1. Wall of resistance number 2 will be right up here at the calendar year reversal top. This was that 4-week resistance level. They pop it right back. And this is where we started really moving into the short side of the market. When it stopped going down and tested this major weekly Dow support, then it had to be to the call side, to the long side of the Dow in the various different components that we use in indexes. And there was Walmart contributed a lot to it. But here's the thing. It's an ascending hook. And the 10-week is pointing up. And you've got 1, 2, 3, you're 4 weeks above the 10-week. When you were 1, 2, 3, 4 weeks and the 10-week blue moving average was going down, that was a bear trend. Now we're no longer in a bear trend. We're in a new bull setup above the weekly moving average on the Dow. And our mathematical formulas and weekly accumulations are accurate and do not deceive, nor are they deceptive or speculative, let's say. No. So 1375, Dow 13,000, we've got a wall of resistance right here. And I'm going to show it on the weekly. It's going to be right here. MMT. This 13,228 is that next major level. There's another 13,179. So we're going to see how that Dow, every time it comes down, gets on this blue ascending value weekly moving average. It didn't go into a weekly sell signal. No. And the market kept churning up. And this was a long weekly consolidation with the weekly breakout, with Ben Bernanke, with worldwide bankers, with Italy, with Greece, which is on the sideline, but more importantly, Spain yields, more importantly, Germany coming to the rescue, the ECB, all of it combined with lower growth in the United States of America, 1.5%, maybe lower. Ben Bernanke is going to be up, and QE3 will not help the market. It will not. But we're looking at the bull side of the Dow, and we definitely have a weekly 1, 2, 3, 4 weeks traveling above, and we've been closing 4 weeks above the 10-week moving average. That is not bear. That means that when it drops down, it will hit support and it will bounce. It's not going to be until bear doesn't come into play, until like when we were shorting it over here, when you are below the 10-week moving average for 4 weeks, and the 10-week moving average is declining in value as far as working with weekly moving averages. The support on the Dow, where these tops were, this top here and this top here, this trend line right here is going to be very important support. That's going to be 12,934. The Dow closed at 13,075.66, up plus 187.73 handles, and 2 days in a row last week, we got news out of Europe on how wonderful things are going to be. And a horrible earnings season in the U.S. And slower growth is not that's not the recipe of putting people back to work in our economy. And households in the various different areas around the country are suffering. Why is it? Because mom and dad are having a hard time going to work. And something needs to change. So what I'm going to say is this. The wall of resistance has come up. And if they fail like they did over here, we'll do the same short. That means you make money at resistance and it reverses. Right now, it's in a bull trend. That's the weekly chart. Over here on a daily chart on the Dow, you can clearly see that the daily side of things, on a daily volatile price level, is that these things are moving in a daily range. You got 229 handles, 250. So Friday had 229. Thursday on 726, you had a total movement of 250. Then you had 115, 208, 237, 132. These are big Dow swings, whether they're from the top down or from the bottom up. But we are at that major wall of resistance on the daily. And this is what it looks like. And this is going to be that trend line. This is that nice short that happened on the Dow that we called. And we did. And we were right. Why? Because this was a major wall of resistance. And as soon as a weakness started to build, that's when that side of the trade paid. Then we put the bottom in on a daily level, and he's kept right above the 200-day simple moving average. These are daily 10 and 20 moving averages. And in the short term, it's going to come right here, right now, right where it is. Right there. Okay? And this is that ascending pattern. Okay? These are that lows above the 200-day simple moving average. And this is that wall of resistance right here. It's going to be in this bar right there. Okay? And it's going to be slightly right below that trend line right here. That's going to be that first resistance area. If we can close above and consolidate, we can get higher on the Dow. Now, that's a daily level. Now, on the monthly level, on the Dow, which is very, very important to understand, that's why we're doing this update on our new site, and our new traders and people that have joined our network need to have a little bit of a clue as to what may or may not happen. This is a monthly chart on the Dow. And the monthly reading is that we're 85%. We're getting a little bit over in the overbought area of the yearly movement again. Now, when I go back to the 2007 tops, that's in the 2008 downtrend, that's right in this area, right where I'm at. You've had this great rally on a monthly level since the austerity packages have been used. But the Feds are running out of bullets. QE3 will not have the effect that the other ones had. Okay? So, basically, it's a long-term 2009 ascending monthly trend coming back to a 2012 double monthly top of resistance. You can see the 3-4 months up here. It got tired. We've tested the year move. This is a yearly movement. This is the upper end of the resistance on this monthly level. And I will draw one more trend line for my MMT to understand one thing. This particular 2008 first monthly bar right here, that was on 1/1/2008, is where that drop down, he comes up, but look at it. It never did look back. Now, if we don't get a different president, or if we don't get some kind of resolution on tax reform, and if we don't get a resolution for small businesses and manufacturing to pick up here, I can tell you one thing, you'll have another monthly reversal that will look just like this one did, if things do not change on the end of the year. Right now, we're in the dog days of summer on the Dow. We're coming up to resistance. We have low growth. There's nothing good about any of it economically. Who cares? We don't. We only care which way the move is going. And it's a bullish movement because the 20-month moving average, they held it right there at that support level. The 10-month is slightly rising. I can blow this up for you. There it is. And it's live. It's here. And it's now. And I will tell you that on this monthly level, and it's a standard chart, you'll get all your information using the MMT platform. That one has all the mathematical pricings already set for you. You don't have to worry about it. This big red bar that when the Dow cracked in 5-1, when we were selling short and telling people to get out, that's that monthly down movement. Now, this is the counter trend to it on a monthly level. 2 months back up here. This will ultimately, 13,000, let's just call it 13,253 or 50 area, right up in here. That's going to be that major wall of resistance. If we break above it, we can see the upper trend line that goes back to the 2000 and late 7 calendar year breakdown in January, and then how it just kept going down all year. Now, markets have directions based on success, and market have directions based on failure. What we'll be doing with the Dow is using it as a, because it's only 30 stocks, So we already know what Dow component to make it tick. Industrials are going to have to lead the rally for this to break these tops. If we fail at the wall of resistance and start to get distribution, we'll let you know right away because there's some big trades. So the Dow is bullish for this time of year. This is going to be your lower end of the support level, this monthly bar that was set on 6-1 as far as the body goes, and he comes down. And these are rising bullish, but I will tell you, we are getting a little bit over, we're in the overbought zone on the Dow with this counter rally. Once again, Dow Jones counter rally. If you'd like to find out more about indexes and sectors and indices, we cover them all. And we can give you the analysis for a very good rate so that you know how to adjust your risk. A lot of people need that guidance. If I were you, I'd be one taking it now. We wish you luck if you're an innocent bystander watching our videos. We've hoped that we have been of help. There are lots of things that you need to read on the site to try to bring you up to date. Remember, the market's changed. People never did. And the markets have changed significantly in the buy and sell tape. There's many things. I'm not going to go into that. But this is the Dow conclusion of that monthly chart. Dow Jones Bull.